The online payments provider PayPal has had a great run since the March 2020 lows, down about $83, traded up to $300 in July of this year. But the story since then has been somewhat different, with the stock sliding heavily. So actually, is this just a buying opportunity for PayPal, or are there even worse times to come? I thought it'd be interesting to do an update on PayPal. They've been in the news quite a bit recently because of the alleged takeover approach for Pinterest that didn't come off. The stock has been really heavily hit. You know, if we think about what the broader stock market indices are doing, like the Nasdaq, for example, you know, great performance this year. PayPal is at the moment trading back to levels not seen since November last year, so been under quite a bit of pressure. But is it a buying opportunity down here? So I thought, let's take a look at some of the recent news, some of the analysts' expectations for next year for the stock. Then we'll come back onto the charts and take a look at the technicals in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do an update on PayPal. They've been in the news quite a bit recently with their takeover and net not takeover of Pinterest. The shares have been under quite a bit of pressure, negative for the year so far. So I thought, let's do an update. Let's take a look at some of the news around it, why they're not doing well, analyst expectations, levels to watch. Then we'll jump back onto the PayPal chart and take a look at things in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel, and it means we can continue to push out lots of different content on the various markets and stocks that we cover throughout the week. Right, let's get into it and take a look at PayPal in a bit more detail. So just in case you're not sure what PayPal is, they've been around for a while. It's an online payment system. So it's a way for paying for goods and services over the internet. It came to the market initially in 2002 via IPO. Then it was acquired by eBay, the online auction business. Then it was spun off as a separate company, so you could buy stocks in it again in 2015. So over the last month or so, it was thought to be in talks to acquire Pinterest, the image sharing and social media site. But we've had a statement from PayPal since then saying this is not going ahead. I think this is something that did put some pressure on the stock. And there's been, I think, some analyst downgrades recently. Just this week, we've had a downgrade from the analysis business Bernstein, who came out and said that actually the problem for PayPal now is competition. So it risks being disrupted by the likes of Shopify and Klarna rather than being a disruptor itself. So it's so established now, it's at risk from a lot of these newer payment companies that have come around in recent years. It had also been weak before this downgrade anyway. We had, when their earnings were announced, the company's revenue outlook for next year. They expect revenue to grow by about 18%, I think, in 2022. But again, this was lower than the market was expecting. And when it comes to earnings announcements, it's not so much about the numbers, it is about expectation. So a bit of disappointment for the market there, and it has been under pressure. When it comes to analyst forecasts, at the time of recording, the stock is around $206. It's a really wide range of forecasts for the next 12 months, ranging from about $172 on the downside, so 15% lower than where we are now, to $349 on the upside, so more than 50% higher than where we are now. So some confusion, we could say, when it comes to analyst expectations. So overall, how's the stock done? Well, PayPal for the year so far, 2021, it's down 12% on the year. And you look at what the Nasdaq's done, clearly massive underperformance. PayPal is now trading at its lowest levels since November 2020, so nearly 12-month lows for the stock. We'll take a look at it on the chart in a second, but first of all, let's put a bit of colour on the numbers. Look at the levels to watch. So for me, when it comes to resistance, the first hurdle is the latest blip higher before it slid off again, and that comes in around $216. After that, if we saw it really recover from here, I think we've got to look at 250 as a big psychological level. On the downside, we've seen it trade so far as low as $200 this year, the 9th of November lows. If we wind the clock back a year, the really big level from November 2020 is $185. That was a low back then. But as usual, let's take a look at these in a bit more detail. Take a look at the charts. Let's see if there's an opportunity down here. So here's the chart for PayPal going back to early 2020, so almost a couple of years we're looking at here. We'll take a look at the trends in a second, but first of all, Let's kick things off as usual with our 20-day moving average. So just as a reminder, moving averages, we get a buy signal when the price moves through the moving average, like here in May of this year, and a sell signal, which is actually the latest signal on PayPal, when the price falls below. And we had that in October when the price fell through the moving average. The moving average was around 263 for the stock. Price falls below. This is a suggestion that perhaps the trend is going to be down. That has been the case so far, with the stock slipping back to almost, pretty much $200 since then. At the moment, that moving average is sitting around 220 for the stock. So it would take strength through here to suggest that perhaps the trend is changing. So pretty weak still from a moving average point of view. If we take a look at the RSI down here at the bottom, got a 10-day RSI. And because this sell-off has been pretty relentless over the last month, the stock has dropped from that high in October the 20th high, around about 273 down to 200. We've seen almost a 30% decline, 25% decline for the stock. The RSI has gotten really oversold. You can see it down here. It's the most oversold it's been. We'd have to go back to those March 2020 lows when, of course, we saw plenty of stock markets, plenty of stocks really hard hit. So very oversold from an RSI point of view, suggesting that perhaps that the sell-off has gone too far. But let's have a look at the price action. Let's take a look at the charts. So this was the trend on the way up from the March lows and started to wobble a bit in May of this year. Had a little push through that trend line. But the stock then just about traded up to fresh all-time highs in July. It traded as high as 310.85. So about $1.50 through those February highs, but has really run out of momentum since then, gone crashing back through that trend line. I suppose you could argue the latest trend looks something like that, off the highs, off the July highs from this year. There's our trend at the moment, you could say. It's only been touched a couple of times, so arguably isn't a valid trend line yet, but that trend line is coming in around the 275 mark at the moment, which does pretty much tie up with those October highs from late in October. So for now, I think from a trend following point of view, perhaps the risk is that any rallies still run out of steam. We see investors not really liking the stock over the last couple of months. So perhaps there's even more weakness to come. When it comes to downside targets, I think if we broke $200, that's pretty much a big psychological level, I think, $200. If we saw it break through there, perhaps the risk is then we start targeting these lows from September, November 2020. So in the 170 to around 175 area. I think that could well be the next target if we do see it break below $200. So it's an interesting one to watch. Perhaps we will see some support coming in ahead of those levels. It's clearly very oversold from an RSI point of view. So I think it's a very interesting stock to keep an eye on, to see if it does try to make a base down at these levels. But for now, with that trend from those July highs still being down, I think from a pure trend following technical analysis point of view, it's the risk is we could well see further weakness. And I think for me, that $200 level is the one to watch. A break below there could open up more selling. We'll come back to it though and take a look at it and see if things have changed over the next few weeks. That's it for the update in PayPal. We'll see if it can recover from here. Really interesting stock to watch, I think, to see if we can get some sort of a turnaround in its fortunes. We'll come back, we'll do an update. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.